All right, buckle up, everyone, because today we're diving deep into a company you sent our way, and it's a fascinating one. KEC International. Global Infrastructure EPC Company, really a powerhouse. We've got their Q2 FY25 performance report in front of us, so we're talking financials, we're talking project updates, future plans, all of that good stuff. And to make things even juicier, we've also got their note on factors affecting investor confidence. So lots to unpack today.
Yeah, there really is. I mean, just to start, you look at some of these projects they're working on, like their 625 megawatt solar project in Rajasthan, their biggest ever, by the way. Alongside that, a major substation project in the USA.
Wow, that's impressive. It definitely gives you the sense of a company that's, really making moves. But honestly, the first thing that jumped out at me when I was looking at this report was their order book, over 24,000 crore, which is a 50% jump year on year. I mean, that's going to mean something, right?
Absolutely. I think it really speaks to their diversification strategy, honestly. They're not just sticking to power transmission, which is what they've traditionally been known for. We're seeing them in renewables, railways, even civil construction. That kind of broad portfolio is probably pretty attractive to clients, especially in a world that's, increasingly focused on climate change and needing infrastructure.
Yeah, it's like they're not putting all their eggs in one basket, which is smart. But even with all this success, they're not without their challenges, right? The report mentions manpower shortages, heavy rainfall impacting projects, even some client payment issues.
Right. I mean, those are pretty common in the infrastructure world, to be honest, kind of the nature of the beast. So I'm interested to see how their strategies for dealing with them play out. It looks like they're actively recruiting and strategically slowing down projects facing payment delays, so maybe a cautious approach.
Cautious, yeah. But I do wonder, is that maybe too cautious in a world that's so hungry for infrastructure? I mean, are they going to miss out on opportunities while they're being careful, especially with all these competitors trying to get a piece of the pie?
That's a good point. It is a tough balancing act for sure, like risk versus reward. Too cautious and you might fall behind, but too ambitious. And you could end up with project overruns and financial strains. So we'll see how they walk that line.
It's a tricky situation for sure. Now let's talk about their financial strategy for a minute. They're planning on using the proceeds from their QIP, that's qualified institutional placement, for debt repayment and expansion. Sounds like they're trying to balance things again there.
Yeah, it's a long-term vision kind of thing, I think. Debt reduction helps their financial foundation, sends a good signal to investors. But at the same time, investing in expansion helps them capitalize on new opportunities, stay ahead of the game. It's tricky, but if they pull it off, it could be a really smart move.
So there's a lot riding on this. It makes me wonder, what does the QIP itself say about investor confidence? Like, do they need to raise capital this way because they're feeling the pinch, or is it a sign of strength?
I think it's a bit of both, honestly. I mean, a successful QIP shows that investors are willing to back them, which is good. But it also raises questions about, their existing debt levels and how much they can really fund expansion just on their own.
So a bit of a mixed bag there.
Okay.
Okay, let's switch gears for a second and talk about these new product lines they're getting into, like the E-beam and elastomeric cables. Are they spreading themselves too thin, or is this a smart move to get into some higher margin segments?
I'm excited about this, actually. This tells me they're thinking ahead, not just reacting, but trying to anticipate what the market will need.
Yeah.
Those cables, they're specialized products, potentially higher margins, which lets them kind of move away from just competing on price alone, which is good.
Okay, so a strategic play then. Well, let's pause for a second and take a look at their Q2 financials. Revenue is up 14%, hitting 5,113 crore. EBITDA and PBT margins are also looking pretty good, and they even managed a PAT of 85 crore for the quarter. So on the surface, things seem to be going well, right?
The numbers look good, that's for sure. But you always have to dig a little deeper, right? Is this growth sustainable?
Are these margins just a one-time thing, or is this a real shift in their profitability? That's what we need to figure out.
Yeah, the big question. But before we get too deep into that, I'm curious about these new product lines again. Is it all about higher margins, or is there something more to it?
I think there's more to it, definitely.
Okay, tell me more.
It's about positioning themselves as like a technology leader in the infrastructure space. These specialized products, they command higher prices, yes, but they also show off their expertise, and that can attract a whole different kind of client.
So a bit of a prestige play as well. Interesting. But before we get too carried away with all the positives, let's remember those factors affecting investor confidence that we mentioned before. The report does point out some concerns, and I'm curious to get your take on how those might play into the bigger picture.
Yeah, it's always good to look at both sides, right? We've talked about the successes, but acknowledging the challenges is just as important.
Hmm.
So let's unpack those investor concerns and see how they might impact KC's journey.
Sounds like a plan. Let's do it. Okay, so let's get into these factors affecting investor confidence, shall we? This part of the report, it's interesting, right? They highlight both the good and the bad, almost like a SWOT analysis, but in like story form. What were some of your takeaways?
Yeah, it really is a mixed bag. I think it kind of shows where they are right now, this duality. On one hand, you have that record order book, which is fantastic, and the QIP, which did well and brought in investor money, and they're definitely committed to reducing debt. All those things, they point to financial stability and a pretty promising growth trajectory, right?
Right, you can't argue with that.
Right.
But then there's the other side, the manpower shortages, the projects getting slowed down by weather, and those client payment issues that just seem to keep hanging around. It makes you wonder, are these just like growing pains? Or are they signs of something more serious, some deeper issues?
It's the question, isn't it? I mean, every company has challenges, especially in a field like infrastructure. Things happen, but it's all about how they respond. So they're being proactive, right, with the recruitment and strategically slowing down projects where they're having payment problems. But is it enough? Are they really getting to the root of the problem, or is this just a temporary fix?
So it's not just about acknowledging the issues, but actually showing they have a real plan to deal with them long term. Makes sense. But I'm curious, how do you think all of this, both the positives and the negatives, are affecting how the market sees KEC? Are investors buying into this whole growth story, or are they still a bit hesitant?
Honestly, I think it's a bit of both. There's definitely some cautious optimism out there. They're doing a lot of things right in terms of growth, diversifying, being smart with their finances. But those challenges we talked about, they do cast a bit of a shadow, right? I think investors are waiting to see some more concrete evidence that KEC can not only win contracts, but actually finish them on time, within budget, and make a profit doing it, even with all these obstacles.
It's like they're being judged on two fronts, their ambition and their ability to actually deliver. Speaking of ambition, they've set some pretty big goals for themselves. EBITDA margin of 9–10%, beating their own guidance for order inflow, and 15% revenue growth. Are those even realistic targets, or are they setting themselves up for a fall?
Well, you have to admire their ambition, that's for sure. But yeah, it needs to be grounded in reality. I mean, they do have a good track record of growth, and the sectors they're in, especially renewables and infrastructure and emerging markets, there's a lot of potential there. But those targets, they are aggressive. There's no denying that. It's going to take flawless execution, a good economic environment, and maybe a little bit of luck to hit those numbers.
So a lot of factors in play, some they can control, some they can't. It makes their ambition even more daring, don't you think?
It does, absolutely. And that's what makes this whole thing so interesting, right? Will they be able to pull it off and reach these goals, or will they get tripped up by all these pressures? It's like a cliffhanger waiting to see what happens.
It really is.
Yeah.
So far, we've looked at their financials, analyzed the challenges, and explored their ambitions.
They have.
But now I want to get your personal take on all of this. What were some of the most surprising or even just intriguing insights that you got from this deep dive into KEC International?
That's a good question. For me, it's the sheer scale of their transformation and just how audacious it is, really. They're not happy just being a regional player in power transmission anymore. They want to be a global infrastructure giant, plain and simple. Getting into new sectors, embracing new technologies, taking on some of the biggest projects out there. It's bold, really bold, and I'm really curious to see where it goes.
I agree. It's fascinating to watch them evolve. And what really stood out to me was this balance they're trying to strike between risk and reward, between ambition and actually being able to get things done, between making money now and being sustainable in the long run. It's a real high wire act, and it'll be interesting to see how they navigate it all.
Yeah, they're definitely walking a tightrope, that's for sure. And it's not just about them either. Their success or failure, it affects the whole industry, you know? It influences investor confidence, it sets standards for how projects should be run, it even shapes the future of infrastructure development in a world that's changing so fast.
It's like their story is a microcosm of all these bigger trends that are happening all around us.
Yeah.
But let's bring it back to you, the listener. We've shared our thoughts, we've gone through the report, we've explored the complexities of what KEC is going through. But now it's your turn. Knowing what you know now about their successes, their challenges, their goals, would you invest in this company, and why?
That's the million-dollar question. And there's no easy answer. We've given you the information, the analysis, different ways of looking at it. Now it's up to you to weigh it all, think about your own risk tolerance, and make a decision.
We've given you the map, but you choose the destination. That's what I love about these deep dives. It's not about giving you answers, but giving you the knowledge and the tools to understand the business world and make your own judgments.
It's about empowering you to be a participant, not just a spectator. And that's what makes it so rewarding, this chance to learn, to analyze, and come to your own conclusion.
Absolutely. So thank you for joining us on this deep dive into the world of KEC International. Hopefully you found it insightful, thought-provoking, and maybe even a little bit inspiring.
And remember, the journey doesn't end here. Keep exploring, keep asking questions, keep diving deep.
Wow, it has been quite the journey, hasn't it?
Yeah.
Really getting under the hood of this company and trying to figure out where they're headed. So much to think about.
Yeah.
I'm curious, for you, what's really sticking with you from all of this? What's going to stay in your mind long after we're done here?
For me, it's that tension, that balance between ambition and execution. I mean, KC International, they've set the bar really high, which is great, but they're in a tough spot, right? Like manpower shortages, supply chain issues, geopolitical risk, all that stuff can really throw a wrench in the works, even for the best companies. So it makes you wonder, can they really do what they're setting out to do? Are they going to get tripped up by things they can't control?
Yeah, it's like they're on this tightrope, trying to balance what they want to achieve with what's actually possible. For me, I think what really struck me was how much impact they have. It's not just about building power lines and solar farms. It's about shaping the whole landscape of energy, of connectivity, of how we develop as a society. It's a business, yeah, but it's also about the future, about what kind of world we're building.
That's a great point. It's bigger than just their bottom line, that's for sure. They're trying to tackle some big global issues like climate change, access to energy, filling those infrastructure gaps. So it's almost like their ambition comes with a sense of responsibility.
Absolutely. What they do affects more than just their company. It affects communities. It affects whole industries. Makes you think. But let me ask you this, just on a personal level.
Yeah.
If someone came to you and said, hey, should I invest in KEC International? What would you tell them based on everything we've talked about today?
Well, first thing I'd say is do your research. Don't just jump in based on what you hear or what the stock price is doing. Really dig into their financials, look at their projects, see how they manage risk, understand who their competitors are, what the regulations are like, where they're operating, all those external factors. And most importantly, be honest with yourself about how much risk you're comfortable with. I mean, KEC, they have huge potential, there's no doubt about that, but there are no guarantees in this game.
That's good advice, for sure. It's about making informed decisions, not just following the hype. We've tried to give you the tools, the information, different ways to think about it all. Now it's up to you to put it all together and figure out what you think.
Exactly. And that's what makes this whole process so interesting, right? It's about empowering you, the listener, to be part of this world of business and finance. It's not just about watching from the sidelines. It's about understanding how it works and making your own choices.
I couldn't have said it better myself. So with that, I think we've reached the end of our deep dive into KEC International. It's been an amazing journey exploring their story, their successes, their struggles, everything.
It really has.
And honestly, I'm still left wondering what will happen next.
Yeah.
Will they reach those ambitious goals? Will they overcome those challenges? Only time will tell. But one thing's for sure, it's going to be fascinating to watch it all unfold. So to all of you listening out there, thank you for joining us on this adventure. We hope you learned something, that you had some aha moments, and that you're leaving here with more questions than answers, because that's what it's all about. Keep learning, keep exploring, and most importantly, keep diving deep. We'll see you on our next Deep Dive.